Put on your Siberian grizzly pants and hang your stocks from a tree. It's bear season for investors. Hi everyone, Marc Lichtenfeld here, Chief Income Strategist with the Oxford Club, and this is the bear. That's right, the time for what ifs and maybes is over. The S&P 500 has fallen 20%, which means we are officially in the belly of a bear market. The Nasdaq is faring even worse than its older brother, falling 32% from peak to trough. Understandably, people are freaking out. No, not like that. I'm talking, yeah, more like that. Now, I understand why folks are upset. Looking at your 401k and seeing it worth 30% less than just a few months ago would soak through the Tommy Hilfigers of even the most seasoned investor. They're probably telling themselves they knew the market was topped out. There was nowhere left to go but down. They could have sold. They should have sold. Or should have they? These feelings are totally natural, but they're wrapped up in a big tortilla of hindsight and deep fried in a bubbling vat of confirmation bias. If these folks were being honest with themselves, I mean truly soul-searchingly eating cheese puffs at 2 a.m. honest, they've been worried about the market on and off since the day they started investing. If you jumped ship every time the market zigged or zagged, you'd have spent most of the time on the sidelines watching as stocks climbed higher and higher. My advice, don't beat yourself up about it. Bear markets happen. They feel awful, like an annual physical. But they usually don't last long, and more often than not, they clear out the froth and present us with a big sack of buying opportunities. Don't believe me? Let's put our new bear friend into perspective and see how he stacks up against the bears of markets past. According to research published by Nick Majul of Ritholtz Wealth Management, the U.S. stock market declines at least 10% every 2 years. It falls 30% every 4 or 5 years and drops 50% once a generation. So a 30% drop like this one, it's not only fine, it's expected. As Uncle Ricky said when he started the all-prune diet, it doesn't feel great, but it happens regularly. Think about it like this. Even with these occasional drops, stocks go up in the long term. Take a look at the dip we had in February 2020. People were kicking themselves that they stayed in the market, and yet here we are 2 years later, more than 1,000 points above the pre-dip levels. How about a stronger dose of perspective? That red circle sitting halfway up that mountain is our little 2020 dip. You see, the market is a long-term gain, and the only one who benefits from you worrying yourself an ulcer is your gastroenterologist. Well then, Mr. Dividend YouTube guy, what am I supposed to do, I hear you say? Well, here are a few strategies I use that could help you get through this and future bear markets. First, don't keep any money in the market that's needed for short-term purposes. If you need the capital that's invested in the markets in the next 3 years, take it out now. Not because I think the market is going lower, but because you can't afford it if it does. Some people invest for specific goals like retirement, college, a child's wedding. If the money's invested in the market for those or other short-term expenses, take that money out now. And I don't want to hear that you've taken a hit so you have to leave it in to make some of it back. Get it out now or Jeannie will have to settle for one of those wedding cakes made of cardboard on the inside.
It's made out of cardboard!
And frosting.
When it comes to funds invested for the long term, don't worry about it. I'm serious. Just leave that money where it is and forget about it. You can even take advantage of the dip and buy more stocks at a big discount. Now, in next week's video, I'm going to recommend some specific stocks to buy in the current bear market, so be sure to subscribe by clicking that red subscribe button so you don't miss that video. Now, my next tip is to use stop losses. A stop loss is an automatic trigger that will sell a stock when it hits a certain price. This takes the emotion out of trading and keeps you from overstaying your welcome in a plunging stock. A stop loss is that friend who sits you down and slaps some sense into you when you're up to your eyeballs in the worst relationship of your life. You might feel like you're smart enough to know better, but you're just too close to that case to make that call, detective. Now finally, just because the market is going down doesn't mean you can't make money. Look at short sellers. They make money when stocks are going down. Bear markets are like hunting season for short sellers. Shh, we're hunting women's. Don't know how to short stocks? Check out my video from 2 weeks ago that explains how. And so, just like every picnic basket loving camper knows, Bears happen, but they last less than 9.5 months on average. You can handle that. Just take advantage of the strategies mentioned in this video and get ready to find some great stocks at cheaper prices, which I'll reveal in next week's video. For daily wealth and income building ideas, sign up for my free e-letter, Wealthy Retirement. Just click the link in the description to get started. I'm Marc Lichtenfeld, and I'll see you next week with my list of bear hunting stocks.